currency, and they'll go, well, I don't like Bitcoin because it's not backed by anything. Well, guess what? The dollar and Bitcoin and all other forms of paper money or digital money are backed by one thing, which is confidence. If people think it's money, it's money. If you have confidence in a form of money, then it has value. So right now the dollar and the Bitcoin are backed by confidence, but the problem with confidence is it's very fragile, it can be lost very quickly, and once you lose it, it's very difficult to regain. And it happens very quickly. And the same thing is true of the dollar. Some set of circumstances, maybe something we can foresee, maybe something more likely that we don't foresee. It's often the thing that you don't see coming that gets you, but something could trigger this. And the system is already unstable. It's highly unstable. And that's where gold, see, I don't see a slow, steady increase of gold up to, $10,000 an ounce. I see it kind of chugging along, down a little, up a little, in a range, but all of a sudden, boom, the day will come, it'll be up $200 an ounce in one day. Boom, next day, $200 an ounce. And then people will be saying it's a bubble, and then boom, next day, up another 3, 4, just start to really go hyperbolic. That's when the panic sets in. That's when confidence in paper money is being lost, as reflected in the higher dollar price for gold, just the dollar price being inverse to the value of gold that people assign. At that point, the talking heads on TV will still be saying, it's no intrinsic value, it's a joke, it's a bubble, etc. But it will have a life of its own, and the price will go a lot higher. But at that point, you might not be able to get it. Well, you can call it manipulation, and it is in a way, but it's also policy. Countries are very powerful. Countries have interest rate policies, foreign exchange policies, tax policies, and they have a view on gold. They don't talk about it. And again, you can say it's manipulation, but it's really just the countries implementing their individual policies. Now, the Chinese are trying to play nice with the IMF because they want the yuan, their currency, included in the basket of currencies that's used to determine the value of the world money, which is the special drawing right of the SDR that's printed by the IMF. So China wants to get into that club. Well, it's like joining any club. You have to play by the rules. The club says, wear a suit and tie, you wear a suit and tie. And in this case, the IMF club says, you have to be a little bit more transparent. So China's doing this in an effort to be transparent. But so they may update, from now on, they may update their gold reserves more frequently than this 6-year tempo I just described, as a way of showing the IMF that they're ready to be, fully or at least partially transparent members of the International Monetary System. Having said that, the 604-ton update, they went from 1,054 tons, which was a lie, to 1,658 tons, which was another lie. But they've updated the lie. When I say lie, I mean they're not transparent, and this is also explained in my book, The Death of Money. They have 3 sovereign wealth funds, or government entities, government portfolios, if you will. One is the People's Bank of China. So that's the one that updated their reserve position and reported the 604 additional tons of gold. But the other one is CIC, China Investment Corporation, which is a sovereign wealth fund. And the third one, which is the most mysterious and biggest of all, is SAFE. SAFE stands for State Administration on Foreign Exchange. And what they do, SAFE actually buys the gold, and then every now and then through a bookkeeping entry, they flip it over to the People's Bank of China, and then the People's Bank of China updates their reserve balances. So I'm not saying the People's Bank of China is lying about their gold. That is how much gold they have, but what it ignores is how much gold does SAFE have off the books. And there, it's reasonable to estimate at least 3,000 tons, maybe more. There's some reason to think it could be more. And how do we know that? I mean, I'm not just guessing. We know mining output is about 450 tons a year, has been for a number of years. We know Hong Kong imports, they run between 700 and 1,000 tons a year. So just combine those two sources, let's just say there's about 1,300 tons a year between Hong Kong imports and mining output that we know about. Now, I also know, because I've been in China and spoken to secure logistics people, that some gold is being brought in completely off the books, actually overland, using People's Liberation Army assets, probably coming in from Kazakhstan, maybe Russia. Source is not clear, but there's some additional gold coming in. But let's just take what we know about it without speculating too much.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
So, about 1,300 tons of gold. This has been going on for 5 years, so that's 6,500 tons of gold that we know about, not counting what we don't know about. Now, what we don't know is, okay, how much of that gold is going into private hands and how much is going to the government, say for the People's Bank of China? That's unclear. I assume 50-50. Could be wrong. Could be more to the private sector, more to government. But in the absence of better information, that's a good first estimate. So it looks like 6,500 tons plus have come in. And assuming 50% of that is going to the government, then there's over 3,000 tons that the government has added that the People's Bank of China has not reported. They just park it in safe in the meantime. So we can be certain China has a lot more gold. If the price of gold went down because people were expecting it to be a lot more and it turned out to be less, that's not, I mean, the price is what it is. I'm not disputing the price, but that's no reason to mark down the price of gold because China actually does have a lot more gold than we know it. Now, there may be hedge funds and technical traders. The declining price of gold, by the way, that's if you make the dollar the measure of all value. When people say gold went down, I say, well, no, it didn't. Gold is gold. It's just gold. It just kind of sits there. The dollar price went down. But what is your numeraire? What is your way of measuring it? So when I see, if you say the dollar is the measure of all value, then yes, gold went down. That would be one way to think about it. But if you make gold the measure of value, to me what really happened is the dollar went up. In other words, the low dollar price of gold is really a strong dollar phenomena, more so than a weak gold phenomena. You get more gold for your dollar. But you could say gold went down, but it would be equally valid, equally logical to say, no, the dollar went up. We have a stronger dollar. Well, that's how I view it, and my basis for that is gold's not the only thing that has a lower dollar price by weight. Copper, wheat, corn, steel, lumber, iron ore. Look at commodities around the world. Look at all the other currencies, Australian dollar, Canadian dollar, Japanese yen. Every one of them is down, if you will, against the dollar. To me, what's the common denominator? Well, it's not that the price is down, it's that the dollar is up. We're living in the world of king dollars. So I look at the commodities complex, including gold, and what I see is not that the price is down, although nominally it is. To me, it's just a strong dollar story, but that's not sustainable because the strong dollar is killing the U.S. economy. That's the world we live in. There are a lot of dangers, I've never said be 100% in gold. When gold goes down, people beat me up. They say, oh, Jim, you're an idiot because, you said, I never said 100%. I said 10%. I still say 10%. To me, that's the right amount. If you have 10% of your investable assets in gold and it goes down 20%, it's only a 2% portfolio loss, because if you have a 20% decline on 10% of your portfolio and everything else is even, your portfolio has only lost 2%. But if I'm right and gold goes up by multiples, that could be your insurance against losses and everything else melting down. So to me, if you don't have gold in your portfolio, it's like not having fire insurance on your house. You better hope your house doesn't